I guess my next question is now the right time. Is this a compelling time, an opportune time to be investing into this asset class in the US?
Yeah, I mean, it's a very good question. I would say a couple things. One is being a market timer is very, very difficult in any asset class. That's one. But secondly, when you just look at the fundamentals, we're at a period right now where there's a significant bounce in interest rates off of the lows of the pandemic. So basically, the summer of 21 is when rates really hit rock bottom. There has been a major movement, over 350 basis point movement in interest rates. That is creating, that's wreaking havoc in most real estate investors' portfolios. It's creating issues for lenders. And so we're in an environment where there's a revaluation event occurring. And so this is a fantastic entry point to go in because I mean, a lot of investors haven't gotten distributions from other investments. Uh, and it's the old Warren Buffett saying, when blood is running in this, you want to be drinking blood when blood's running in the streets rather than bleeding. And so we see, you mentioned lenders, we have almost 500 lender relationships. We are in active dialogue with local, regional, super regional banks in the US. We know where their pain points are. We also know through our lending business what's going on. And so we're positioning ourselves with capital to help solve some of these problems, but make very attractive risk-adjusted returns because of this basis change and revaluation. And so I think we can all debate about whether the Federal Reserve is going to be effective in having a soft landing. Consumer confidence is still strong in the US and actually is strengthening. And it's kind of this bizarre situation where CEOs are worried, chief investment officers are worried. There's a lot of geopolitical risk in the world. The American consumer is pretty darn confident and positive. Part of that's because there's $18 trillion of cash in American bank accounts. There's also $18 trillion worth of debt that consumers hold in the US. Obviously, different households have different components. But consumer sentiment, which is actively tracked, anyone can Google that and see, the American consumer is confident and growing in confidence. American consumer accounts for roughly 70% of the US economy. The US economy is roughly 30% of global GDP. So that is the key economic driver in the world today. And that's the appeal of the US as an investment, is that it's got this enthusiasm, it's got protection in terms of border security, it's got natural resources, it's got a lot of people who want to come here, so it's got population growth, although diminished lately. So those are the factors why the US is appealing. It's got a stable rule of law. And so yeah, I think on a relative basis, and we have Asian clients, European clients, and obviously American clients as well. That's the appeal. That is the appeal of this point in time, in that there's a major revaluation event versus what happened in 2021 and 2022 when there was tremendous transaction volume. I mean, double normal volume in the US and lots of debt put on deals, and that debt is not refinanceable. And so that's going to create a lot of problems for people, and we want to be able to take advantage of that.